Now, our main focus point today is about green fintech, the growth in that market. And, companies are increasingly developing products and services that emphasize the importance of environmental sustainability and building these projects. And how to finance them is becoming increasingly difficult. They just don't fit a normal model that will bring in financiers like VCs, right? Venture capital, as well as private equity. Private equity, they typically like to buy companies that are already at scale, have positive cash flow they can use to pay down the debt that they typically layer on, et cetera. And so that's the challenge. These are very asset heavy solutions. Things like green steel or removing carbon from the atmosphere, just producing and storing renewable energy. And so it's been difficult. That's part of what the Inflation Reduction Act was, to infuse some incentives and stimulus into that market as a whole. Climate tech is benefiting from favorable regulatory tailwinds. That's the good thing. That's the positive. There's still a lot of unique challenges as well as opportunities in these asset heavy climate tech businesses. There's high demand for solutions for things like sustainable fuel, hydrogen, green power, and high capital needs that happen well before production. And that's really a big issue, is how do you get the financing, allow things to scale, which typically take 7 years on average for a typical type of green tech operation to really get to a point where, okay, it's commercially viable and profitable. And so that's what's very difficult, especially in a time when cost of capital has been higher. Yes, interest rates have come down, but they're still much higher than they have been in the past. And so that's why you look at things like the clean tech ETFs, and they just continue to move lower and lower and lower. While there's a lot of demand for this type of financing, it's increasingly difficult to find things that really pencil out from an investment standpoint. The investment thesis in this is often comes down to relying upon a premium that the market will pay for the green technology in order to generate high returns for these businesses. The existence of sustainable green premium in the future is not a given. It may be legislated in the future, and I think that's probably what is needed. Okay, is how does the government create potential artificial premium that will allow these type of technologies to scale, to find a foothold in certain industries and actually become economically viable. Oftentimes the break-even point is not obvious. When you're trying to finance something, that's very important. Everyone wants to know, okay, when is this break even? When does it no longer need additional capital? And when can it start producing profits that can return capital to shareholders, to lenders, etc. And once again, these are capital heavy businesses, not capital light. VCs, private equity, they love capital light businesses, software companies, for example. And so there aren't a lot of software companies that operate in the green space. This is an important aspect to understand, especially when you are looking at the theme, the story around green type of projects. They can work, but they're difficult. You need a certain level of a margin of safety, shall we say, in order for it to make sense from a financing standpoint, because the risk is very high. When you're looking at ETFs, you're looking at companies that promise, okay, we are going to build this great thing that's going to lower carbon emissions or recycle product more effectively or efficiently. Whatever it is that's going to be better for the environment. I always think those things are great if they can actually get to scale, that they can get to cash flow positive. But history says that most of these businesses rely heavily on government incentives, and it's difficult to find ones that, even with government incentives, can remain sustainable longer term and viable businesses. So I wanted to highlight this because there's a lot of growth here. There's a lot of money flowing in that space because of the government incentives. But that does not automatically mean that they will be successful. You have to check a lot of boxes before those can become great investments.